The income tax law and jurisprudence is changing regularly. Also, the Income Tax Act will soon see a complete revamp. Therefore, in these dynamic times for income tax, we are starting this weekly digest on the important issues under income tax which have been seen in the bygone week. So, a very important issue for all those who are getting certain income from renting of residential properties and a regular dispute is whether to treat it under income from house property or whether to treat it as profit or gains of business or profession. While assessees and taxpayers would like to take deduction of depreciation, maintenance cost, etc. and treat it under profits or gains of business or profession, the department might want to treat it as income from house property, and even if the property is lying vacant, a deeming rent would be leviable to income tax. Deductions would be very simple: 30% of deduction for standard deduction, certain interest and taxes deduction, that is it. So, while Finance Act number 2 of 2024 with effect from 1st of April 2025, third explanation to section 28 has been inserted, wherein it is now mandated that income from renting of residential properties with effect from 1st of April 2025 would only be treated as income from house property and not under profit or gains of business or profession. But what about before that? Before that, in the last week, the Honorable Bombay High Court has upheld and laid down two important principles in the case of National Leasing Limited, on the basis of which income from renting of residential property is to be treated. So, first principle on the basis of the Honorable Supreme Court's decision in the case of Chennai Properties and Investments is the principle where it is to be seen in case it is the primary business of the assessee to rent out the residential property and other businesses are secondary, or there is no other business, then such income from renting of residential properties may be treated as profits or gains of business or profession. Second is the principle of consistency as laid down by the Honorable Supreme Court in the case of Radha Swami Satsang, wherein it was held that in case in the previous many years it has been accepted by the department a particular situation. In this case, if for the previous many years it has been held and accepted by the department that renting of residential properties income is taxed under profit or gains of business or profession, then without any change of business of the assessee, a different stand cannot be taken by the department for a particular assessment year. So, on the basis of principle of consistency, it can also be seen and construed whether the income is to be treated as income from business or profession or not. Second important issue which taxpayers, generally corporates, face regularly is a situation wherein they are paying a commission to a foreign agent. Whether all the commission so paid is liable to be deducted as tax under section 195 or not. So, Honorable Supreme Court in the case of Toshoku Limited has held various principles on the basis of which it is to be seen whether the income of the foreign agent is liable to be taxed in India or not. It is to be seen whether the foreign agent is completely based out of India, whether he has any permanent establishment in India or not, whether he renders his entire service only outside India and whether the entire service is received outside India by the person who is paying such commission or not. In case all of this depict that the entire service is rendered and the foreign agent has no business connection or permanent establishment in India, then his income is not liable to be taxed in India, and therefore there is no question of TDS under section 195 of the Income Tax Act on the payment of such commission. Therefore, again it has been held by the ITAT Mumbai in the case of Inductotherm that there is no question of disallowability under section 40A1 for non-payment of TDS under 195 in such cases. Another plaguing issue and dispute with the department with the assessees is the case of reopening of assessments under section 147 by alleging certain loans or share premium as cash credits and adding it under section 68. It has been held by the Honorable Supreme Court that various principles have to be seen before such amounts can be treated as cash credit and a reopening is eligible. It is held by the Honorable Supreme Court in the case of Caluminator Limited that when an assessment under 143(3) has already taken place, then there has to be tangible evidence and reason to believe with the assessing officer to reopen a case and issue an notice under 148. It cannot be a mere change of opinion when the original assessment under 143(3) has already dissected the transaction in detail. Further, the procedure under section 151 and approvals therein should be taken and a reasonable opportunity of being heard should be provided to the assessees in this case. The same was upheld in the last week by the Honorable Income Tax Appellate Tribunal 2. Another important issue, many a times we see that the principal CIT on his powers under section 263 orders a revision in cases where already the ITAT or High Court or for that matter CIT appeals has given its decision. In such cases, it has been held by the Honorable ITAT Chandigarh in the case of Valco Industries that in case an ITAT or High Court or CIT appeals passes an order on a particular issue, then that issue attains finality and the original adjudicating order merges with the order of the ITAT, High Court or CIT appeals for that matter and attains finality. This is the doctrine of merger and this is to be seen in all similar cases. Arguments may be based on this ground alone in case a revision is ordered by invoking section 263. Another important issue for non-residents specifically is a case where a notice is issued by a officer who does not have a jurisdiction over such a non-resident. In such a case, it has been held by the Honorable ITAT Delhi that in case an order is passed by even a jurisdictional AO for a non-resident, the central section, even if they pass an order, but the original notice was issued by the AO who does not have a jurisdiction over the non-resident or any other person for that matter, then such a notice was non-est in law, and consequently the order which is passed on a non-est notice also becomes invalid. The same was upheld by the Honorable ITAT Chandigarh in the case of Shri Manjeet Singh last week. Therefore, it is very important, specifically in case of non-residents, to see who has passed a notice. So friends, thank you very much for watching this video and listening. Please do like, share and subscribe to this channel. We will come to you next week again with new issues which has been occurred in this week in income tax. Thank you very much for watching. Stay tuned.